Okay, in this episode, we will focus on how to target great outperformance. In the previous episode, I showed you the composite, which is my pet time indicator. I showed you that it can achieve, depending on the index, 3 or 6% outperformance versus buy and hold with a dollar reduction of 50% or even more when you apply it to the Nasdaq, and with an average of only one trade per year. So it's great. But those that want to push the envelope and want to go for greater performance, then you need to work more. There is no free lunch in the stock market, then you have to put more time. So I have one good news and one bad news. The good news, as you guessed, is that it is possible, it is doable. You can become a great stock market picker because I learned how to do it, and if I could, you can do it. So it is doable, and you can target outperformance versus buy and hold of 15% per year or even more. But there is also bad news. The bad news is that it entails hard work. So there is no free lunch. Now, I'm going to leave this wonderful setting and I'm going to go to my whiteboard to show you what I mean by having to invest more time if you want to achieve more outperformance. Look at this strategy. This is the first strategy I'm going to show you. It is a great way to make a huge outperformance. Look here. 25.38% annual return from January 1st, 2008 to April 25th, 2026. So it's a huge outperformance versus buy and hold. As we can see here, the red line is our strategy, while the blue line is the S&P 500. So it's great and furthermore. If you look here, the annual turnover is only 364%, which means that you are rotating your portfolio roughly 3.5 times a year, which is not that much when you are really in active trading. You can see that it rebalances every 2 weeks, which make it very fast on short-term trading. And trading more, and I think this is what I love, the universe is based on the S&P 500 component. So it means that we are dealing with highly liquid stocks, which means that you will always get a good feel, very small slippage. So this is, let's say, an easy to implement strategy that nonetheless, it has huge outperformance. I mean, many of you will be thinking this is a backtest. Yes, of course, it was a backtest, but you must know that I'm trading with real money. This is strategy in my portfolio, in my personal portfolio. So it is not theory. I found all the theoretical basis of this strategy is really sound, as it is based on momentum, regions, so very solid concepts. Okay, now that you have a good idea of the amount of trades and work that it takes to become more successful in your market endeavors, now I'm going to give you some real examples of what you can do when you become a stock picker. This second strategy is for those that are really ambitious and really want to go for the sky. Only the sky is the limit. So this is strategy that has an annualized return of 36.15%, which is really unbelievable. And it has been tested from January 1st, 2008. So there was a huge bear market at that time to April 21st, 2026. Of course, it is more for active traders as it rebalances every week instead of 2 weeks as the previous strategy has showed you. The annual turnover here is a little bit higher, 519, which means that you rotate in your portfolio roughly 5 times a year. So it's more for the more active trader, but very far from a day trader, of course. But nonetheless, it requires a little bit more of the work. It is based not on the S&P components, so it is a special universe I created that includes many small caps, mid caps, also some large caps, but not many of them. And there is, as you can read here, min volume, so there is a filter requiring minimum volume because there is lots of half truths. When people talk about the outperformance you can achieve with small caps, most of them are liquid names. They have no liquidity, so in reality it's not possible to trade them. But this gives you a great example of the things you can achieve when you're willing to pull up a little bit more of the work and you know what you are doing. This is the red line is the equity line of this strategy, while the blue line is the S&P 500. So you can see that the difference is significant. Okay, so you have seen a couple of good trading stock picking systems, how they outperform, how they reduce drawdowns. But of course, to reach this trading level, you need to invest time. And I mean not only the time to execute, to implement your trading system, which it takes time, but also time to learn how to code, time to learn which factors work, which factors do not work, time to know the different stock market regimes, when it's risk on, when it's risk off, because sometimes in risk off, nonetheless, you continue to invest it in the market because your time indicators didn't trigger a sell signal, but then your portfolio should adapt. So there are many, many details that you have to learn. And even in present times, you have to have some coding ability, programming ability, and why not? You should learn how to integrate machine learning, AI, into your stock picking selection system. And of course, this takes time. And there are also many traps, many pitfalls. There is the risk of over-optimization. But don't worry, if you're willing to put enough time, I will teach you in this stock picking course what works, what does not work, and even more importantly, what are what I consider the best resources for the small investor. Also, you must know where you belong. You can be very willing to learn, but you have to know what are your personal circumstances. In the past, I was a lawyer, so I had to work many, many hours a day. So then my trading had to adapt to my life as a lawyer. Now I'm not a lawyer anymore. So now I can devote full time, my life, my day belongs to investing, writing my market timing letter, managing my own portfolios, but you have to know where you belong. So if you want to become a stock picker that is rotating or at least executing partial buys and sells every week, you have to know that it's going to take lots of time. And furthermore, the learning curve to develop such a trading system is going to be high. So if you're a lawyer or a surgeon, most probably, I won't recommend certain stock market picking systems. So you have to know where you are, what is your time availability, and don't test yourself because normally our psychology will fail us. So you really have to know where you are now. If your time is in short supply and you're realistic and you know it, then maybe you should stick to ETFs, to the composite, or to our system, Dow Theory, plus high relative strength indexes, which rotates 3-4 times a year. And then it's okay. Then even when I was a lawyer, I could execute such a system. But of course, then you cannot be a day trader. So you have to know where you belong. So in the next episode, before we dive into stock market selection, I will give you a couple of ugly truths concerning stock market picking. While stock market picking is doable, and you can be successful, I tell you, all the odds are staked against you. So don't miss the next chapter where I will give you a reality check about the cruelty and the ugly side of stock picking. But there is a glimpse of hope, and the silver lining is it can be done successfully.